In line with annual expectations, the personal consumption expenditures, PCE, rose 2.6% in the 12 months concluding in December. In contrast, the core PCE, excluding food and energy, declined from 3.2% to 2.9%, below expectations. The EURUSD reacted with a peak to the 1.08 level and subsequently retreated lower. The numbers were interpreted by investors as further support for the notion that the Federal Reserve could commence cutting interest rates in the summer. Based on data from the CME FedWatch tool, the likelihood of the Federal Reserve implementing a 0.25% rate cut is 51.4%, while the likelihood of a 0.5% cut is 37.8%. In contrast, yields on U.S. Treasury bonds reversed course and increased, which stifled the EURUSD's ascent. In contrast, economic data originating from Europe presented a varied outlook. Amid economic uncertainty, German consumer confidence for February declined from 25.4 in January to -29.7, while Spain's unemployment rate reached its lowest level since 2007. According to INE, the unemployment rate in Spain fell from 11.84% to 11.76% in the final quarter of 2023. Anticipated is the monetary policy decision of the Federal Reserve, which is slated to take place on January 30th to 31st. According to the weekly forecast of EURUSD, a bullish continuation is potent, where a daily candle above the 20 DMA and 1.09 static level could resume the broader trend. On the bearish side, the current continuation could extend toward the 100-day SMA, but a break below the 1.07 level could lower the price in the coming days.